Good afternoon, everybody. This is Harmeet from Sigma Picks. Thank you for tuning in. It's been a while since we've done some of these updates on the three ETFs that I follow: the QQQs, IWMs, and SPY. And tomorrow is a big day for the markets, I believe, just because of the Fed meeting and what the recent market upheaval has been about the banks, the regional banks. So it's a pretty big day. So figured this would be a good time to just kind of quickly go over it, see where we stand, and see hopefully we can make some sense of what may be coming and where we could be wrong and where we at least I perceive where markets could go once we know what the Fed is doing. Again, markets will do what they want to do, so always be mindful of that whenever you're trading. That don't if you do have a bias or if you do have a thesis, understand when your thesis is wrong. Understand when you're totally opposite, your bias is totally opposite of what market is doing, and manage your risk properly. Okay, so let's get going. So just quick review. It's been a while, and we've seen this quite a bit rise in at least in SPY for the past few months, and that has been warranted with how the VIX had dropped so much, and we are at least I am thinking that we may be out of the woods. Again, that it all depends on what the Fed is going to do tomorrow, and this right here, that second wave right here, it meets all the criteria, okay, ABC criteria for a correction. And we want to just make sure that we understand that this was also in a big fib zone for this first wave retracement. Okay, so now if this is the one thing that completely I feel is very bearish, is this bear flag that's forming. Okay, this could be something that brings us back and tests this low tomorrow, or this low right here, the 375 374 375 zone low. And if markets perceive that we are what they see, I want to say this correctly, what they see as being a pretty much a progressive move by the Fed, where they may say that, yeah, we're going to start to stop raising the rates. We can definitely see this moving up. This does have this leading diagonal, okay, this leading diagonal structure. I do want to see some sort of correction and then move up, but that may not be the case. They may be the fact that this leading diagonal will get us a fifth wave, that overshoots depending on what the Fed says, and that could get us to retest this 410 area. Again, I have the resistance set, major resistance set at 431.73. So work with zones, even though that's just what it is a momentum high or from a previous down shift. Okay, so zone I would say is 430 to 432. So just be mindful of that is your major resistance zone that you want to be mindful of, and see how the Fed goes. The first waves, again, I always say this, are the hardest wave to decipher. Even though I do have it as the first wave, we want to keep it at that way until we see some sort of move back all the way down to, I think it was 450 some area that we saw, 468 that we saw a while back. And if it does end up going to test that we know that this was just a leading diagonal going back down, and this bear flag will lead us down. Okay, so just know that there's, if you are not trading, or if you're not in a position, just stay light. I am staying light. I only have one position open right now in Tesla. I do think that Fed may pivot. But that's what I'm thinking. They wanted to break something. Something is broken. They're getting some, major tailwinds to stop their raise in their interest rates, and I think that the brevity of the situation is not fully been realized when it comes to how the banks are behaving and what they're doing, specifically regional banks. This is leading to major consolidation into larger banks, and that may not be very good for the little guy or the mom and pop shop that has been opening up, and that could see a lot of closings. So my idea is the fact that I want to wait and see how markets will do, specifically for SPY, and see how they will behave. I probably would let it go all week because I think there's just so much data, even though you'll get momentum moves tomorrow. But that does not mean the markets will behave the same way the next few days. But we will have our answer soon on that front. All right, so let's go to our next chart. QQQ in the same kind of position, but it's in a little bit better position than the rest of the, specifically IWM. We want to also be aware that Qs did not drop relative to this first wave. When it came, it stayed within this 250 zone, okay, and that is 38.2% of retracement of this first larger cyclic wave. Okay, so, and it also has this great making of a rounded bottom. And what I want to see this one, where I will be feeling comfortable, and I said this before, that it has to take out the last major high, which is this fourth wave ending right here. Okay, and that is at 334.42. Again, work with zones, don't work with just static numbers, and you can say that is between 332 and 335, or maybe a little bit more depending on how you create your own zones. But this is in a better position also than SPY, because what we do know is that this right here, this bull flag is starting to break to the outside. I do think that there may be another down shift to complete out this second wave. This is not. This is just a placeholder. It has nothing to do with these values over here. Okay, so don't worry about that. This could go all the way up, come back down here, and stay in this Darvas consolidation for a while. This Darvas consolidation that we're in within this 335 to, let's just say, 250, which is a pretty large zone. So it's staying within that. It is another bottom forming here. So there's a lot going on that is happening correctly for Qs, but they're still not out of the woods. There's still a lot going on. We still have not taken out the last major high, and this is still could just be consolidation for a larger move down. That being said, this A wave that's ending right here is also can be constructed as the end of second wave. That you also have to be aware of that. Okay, and because it meets the major criteria for ABC correction, no matter how you want to break it down, if you want to say A, B, C, or if you want to say A, B, C, whichever way you want to break it down, you can run your fib levels to figure that out. But it has met the minimum criteria for a correction, and it's starting to behave as in this, again, this rounded bottom, that the same thing that SPY is also been behaving as. Now, if this truly was this part right here, 254.26, truly was the end of second wave, then we know that we're getting into money wave, that markets are ready to come in and pile some money into equities, and specifically in Qs, which has higher beta, and they will try to move up. And if once we get to cross this 334.42 or 330, 335 zone, we can tackle that. I think that's where you're going to start seeing money flowing in. Excuse me. But we are in the cusp of make it or break it for at least the next few months, depending on how the Fed says and does stuff. So just know that the things that have could be getting to a point where they're starting to turn around. Again, but there is still, I don't see the light ahead, on this tunnel, but there are some peaks of things coming through that tells me that if we start moving up, that there are people that are going to be continue to buy in and move the markets higher, and hopefully we'll get to all-time highs. The 408s, of course, if it breaks down to below 250, and then all bets are off. We're looking 200 level possibility for the next stop here. Has there been any capitulation that looks like capitulation? Mm, Not the way I see it. The VIX has given us some clues over the last few weeks about how it could be, but VIX hasn't gone crazy. At least in my opinion, it hasn't gone above 40 or 50, where markets are like, wow, let's get out, let's hedge up. SPX puts aren't flying off the shelves, but there are possibility that with the Fed pivot, we could really see these markets move to the upside and get going for the bullish scenario that is set up. And we do want to watch this flag zone. Low of this flag zone will tell you that, hey, that this could be a double top right here, and that could bring us down. Okay, so there are a lot of things that we want to see. Let's get to 334 or anything between. Obviously, the third scenario is the fact that it just stays in this star risk consolidation again, stays in this star risk consolidation for the time being, and just forms a bigger bottom or some sort of a base, and the relative move will come to it once we have a little bit more information coming out next week of how markets have perceived what Fed is doing and what may not be doing. All right, let's go to QQQ. Oh, I'm sorry, IWM. And as warranted, they took a big hit from these banks, regional banks, because they do hold a lot of big regional banks. And we saw this major capitulation that came through. And is this something that we should be aware of? Absolutely. This could mean at least the way I have it set up, we are in this fifth wave ending for this larger second wave. There are few problems with how I see it. I'm looking at two different scenarios. This C wave right here that I have ending right here could also be an larger ending of the second wave. Okay, and because it meets all the criteria. And we also have this fourth wave where it's saying that, yeah, there's a fifth wave coming, and that's what we saw. So that could also be construed into ABC, larger ABC. There's an A here. This is your B wave, and this is your C wave coming to an end. So I think how the Fed, again, not to be around the same bush, but how the Fed will behave or say, or things that comes out, how the interviews and the meetings and the questions go tomorrow, we will have a great idea of how markets will do, depending on what they show us, obviously. And what I do want to see is them start moving towards this 200 level, which is a very, very important zone, and start taking this out, the last transient high. Once we're there, we can look at scenarios where they can go up and start tackling these other major pivots of 209 and 212. Of course, the bear scenario is that this is a larger fifth wave. this flat consolidation is coming to an end, and it is leading us down to this 150 level that would be coming. Uh, and I think that the bearish scenario does take us to that 150 if and how the markets perceive what the Fed is going to be doing. So the last thing I want to quickly just look at the I do follow VIX on this. I just want to show you guys this moving average is a 13-day moving average. I've been following it forever now. It just tells me where and how markets are when it comes to their put allocation in SPX. So we had, again, this move did not take out this last high of the VIX, stayed below it, okay, and now we're back below this 13-day moving average, and we gap down below it. So this is a big clue saying that markets are thinking that whatever the Fed may do, that they are going to have some sort of a pivot and get the markets moving. I do want to see it. If we start going below this zone, this 18, 16 zone, that's where the grind up happens. If you go back and look at it, and this is where markets slowly start to melt up in a way. So I hope this helps. We'll continue to follow this. I think this is a great time to start this back up, and I hope you have an awesome day. Keep your trading light if you can. If you're in, you're in. If you're big money, I guess you know what you're doing, and we will talk soon. Thank you so much. Have a great day. Bye bye.